Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Beginning with some very bullish news, it has been another rough start for investors in Gabe Plotkin's Melvin Capital Management. Bloomberg published an article today reporting that the hedge fund tumbled 20.6% in the first quarter of the year. The fund lost 3.8% in March, making it the third straight month in a row that Melvin has experienced declines. This is coming after major losses last year accumulating to 39%. Upon request for comments, a spokesman at Melvin declined to comment. Nothing gets me harder than watching hedge funds crumble. The big news today, however, come from the Fed, which is what we are going to be hyper-focusing on. In minutes from their policy meeting 3 weeks ago but released today, Fed said half-point rate hikes could be appropriate multiple times this year. Remember, in the beginning they said that they were planning to make quarter points, so the fact that they are doubling down is not good for stocks. Many favored this half-point increase, but the sudden situation in Ukraine with Russia held them off from initially pursing this. It was revealed today that the Fed is moving closer to shrinking its huge $9 trillion balance sheet in the coming months, something Brainerd commented and hinted at yesterday. There is a plan to draw down bond holdings, highlighting just how desperate the Fed is becoming with their attempts to accelerate inflation-fighting efforts. Markets are now accepting higher rates than anticipated, which is why stocks reacted the way they did. Economists worry that the Fed waited too long to begin raising rates and that due to the harsh response they now plan to make, it could end up triggering a recession. We talked about this in great depth. The Fed might be purposely, without publicly acknowledging it, be planning to force a recession in order to start over and gain control over all the problems it created. Remember all those Wall Street guys telling us to be cool and hopeful just a couple of days ago? They are nowhere to be found now. They were most likely pumping stocks because markets have taken a significant dip today. It is getting panicky in Wall Street and in Washington, D.C. As I said, the only thing that we can predict is increased volatility over the next couple of months. Stocks fell hard today, obviously as a reaction from investors coming to terms with the fact that the Fed is more hawkish than anticipated. The S&P dropped 1.3%, Nasdaq lost 1.9% and the Dow Jones lost 0.4%. In the bond market, the 10-year Treasury yield rose over 2.6%. A lot of focus centered in Ukraine and Russia as more sanctions are being readied to be placed. Russia was caught committing genocides in several cities in Ukraine and some European countries are debating how to react, bringing more volatility and uncertainty around the energy sector. Before we talk about performance, today my Discord hit an absolute home runner in the day trading channel, though it played it quite different than we thought it would. I alerted for various scalps to enter and exit ADN profitable. I kept saying at various points that I saw ADN having a bottom price of around $3.40 before it began blowing up. And indeed that is exactly what happened. ADN dipped back down to 3.39 before going on a run that extended all the way to the after hours, having gains of 19%. If you take a look at my Discord, you will see screenshots of the many traders who played this, gaining hundreds and thousands of dollars in our trading session. Come join my Discord if you want to day trade to amplify your GME and AMC or other stock positions. Links will be in a pinned comment in the video's description. Now, let's talk about performance. The Fed submitted over $1.731 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 59% of the total volume today, while dark pool trades for GameStop accounted for 54% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. AMC had a bearish day, losing under 1%. The stock opened to a small bull run that took it from 20.40 and over 21.80. After that run, AMC began retracing, breaking support and finding a bottom at 20. After that, it began bouncing up, trying to break above 20.60. It initially got rejected, sending it back to 20, but it made a second attempt to break that resistance and did so, this time running to 21. After this jump, AMC began another dip, closing at 20.39, below the VWAP. Support will be found at 20.40, 20 and 19.80. Resistance will be met at 20.60, 21 and 21.60. GameStop had a bullish day, gaining over 3%. It opened really low around 149. After a brief while, GME began running up, moving over 159 for a brief moment before dipping back down. It found a floor at 151 where it then began bouncing up and running over 158. GameStop closed at 156.64, above the VWAP. Support will be found at 156, 152 and 149. Resistance will be met at 159, 166 and 174. On this next part of the video, I am simply going to copy and paste this morning's video segment for those interested in listening to it. If you want to skip that segment, I want to thank you for tuning in today for this short afternoon recap. Be sure to join the Discord for a lot more content too. I wish you an amazing rest of your day and to the moon. Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. So, today we are switching things up a bit and are going to talk about a scandalous development that made too little headlines for reasons that will become very apparent. Russian oligarchs have found loopholes in the financial and legal systems by which they can break the restrictions and laws implemented by the American government and continue to invest in the US stock market. We will be narrowing the scope of today's story down to one man, but this is something that is growing and happening with various of these powerful Russian individuals. It's going to be shorter than usual video, but a very important one that illustrates the incompetence of the system and how laws do not apply to the rich. You see, for years, Russian oligarchs have been deploying many shell companies which route money through small European banks with connections to Wall Street firms, quietly transferring and placing billions of dollars with some of the most prominent hedge funds and equity firms known. The New York Times broke a story with interviews from people involved in the matter that said Roman Abramovich used a shell company back in 2012 registered in the British Virgin Islands that wired $20 million to an investment vehicle in the Cayman Islands that just happened to be controlled by a large American hedge fund. This kind of operations where money is moved from Russia to Europe to the Caribbean to the United States is unknown to most, but it's actually the blueprint and go-to plan by which the rich and powerful avoid all kinds of regulatory oversight while breaking numerous laws. The most important factor in all of this is that every corporate director, every hedge fund manager or lawyer involved in this can, under the eyes of the law, say that they aren't working with oligarchs such as Abramovich. In fact, the way this tactic is used, some of the participants aren't even aware of the money they are helping manage. The recent developments in Ukraine now have forced the hand of the governments by directive orders of presidents to begin to put pressure and hunt down on these secretly hidden fortunes. The IRS, for example, has been asking Congress for more resources to help oversee Biden's sanctions program. In the Capitol Hill, lawmakers are pushing for a bill known as the Enables Act, which will require investment advisors to identify and be more careful when they vet customers. Abramovich, whose net worth puts it around $13 billion, has had his assets frozen, which include the famous Chelsea Football Club in London. The United States has not placed any sanctions on him as of yet though. In the United States, Abramovich owns luxury residences and other real estate assets, but the bulk of his money is actually sitting in the safest place criminal and tainted money could ever sit, Wall Street. Financial institutions are the ones actually guarding most of the wealth he has here in the US. Firms like Concord Management have facilitated all of this. They don't directly manage Abramovich's money, but rather act as investment advisors and a due diligence firm. They make recommendations to the directors of the shell companies in the Caribbean tax havens about the best potential investments. When you look a little further into Concord, you will begin seeing very close ties to Credit Suisse, Goldman Sachs and Morgan Stanley, who have introduced Concord executives to hedge funds. Over the years, Concord has been arranging hundreds of investments across different hedge funds and private equity firms for Abramovich, and some of these funds are actually managed by BlackRock and Bear Stearns. Yes, you heard that right. BlackRock is also somehow involved in all of this scheme. Concord steered tens of millions of dollars from two shell companies to a Texas hedge fund known as Highland Capital. Highland hired J.P. Morgan to ensure the companies were legitimate and that the investment complied with anti-money laundering rules. Of course, J.P. Morgan found no issues in their investigation and cleared the investments, a shocker to absolutely no one. The Cayman Fund opened for business in July of 2012 when $20 million arrived by wire transfer. It remained running as an independent entity, buying and selling ETFs and employed by fund managers' main U.S. hedge funds. As American institutions were asked to comment on what exactly have their relationship been with the Cayman Island and Virgin Islands, they all declined to comment. We see that in 2016, Investigators filed suspicious activity reports alerting the government to transactions that Concord arranged involving a ton of Abramovich's shell companies in the Caribbean. Remember that American companies are required to file such reports to help the U.S. government combat money laundering crimes, but to the surprise of no one, there were no inkling or reports made. These reports are not evidence of any wrongdoing, they are just reports of unusual activity, but nothing was filed. J.P. Morgan was requested to comment by a spokeswoman declined. Nobody is saying anything right now, probably because as this story has come to light, there could be consequences for them if they get caught and prosecuted by the law. Nothing serious though, just the typical slap on the wrist and don't do it again type of scenario at worst. It was a short video, but one that I wanted to share with you guys so you can see how deeply embedded criminality is in the system. There is a loophole for every rich corporation and person out there, and we need to keep talking about it and bringing it to light. I want to thank Matthew Goldstein and David Enrich for their amazing work interviewing and collecting some of the evidence. That is all I have for you guys. Thank you for making it to the end of the video if you are still here. Be sure to come on over and join the Discord for an even more engaging experience with fellow investors. We have tons of things there, from conversations about GameStop and AMC to day trading alerts, so give it a try. Links will be down in the video description. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. If you join the $25 Patreon tier, you will have access to all things premium, where you can be part of a huge day trading community and get alerts to the best stocks to day trade with clear entry and exit prices. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.